Recently, Palantir reported their third quarter results, causing the stock to pop around 20%. Investors are wondering, are new highs ahead? Well, for context, the stock previously peaked around $45 a share versus around $20 today, a little under. So it's still under 50%. It has been a bumpy ride over the last few years. However, since it initially came public through its direct public offering, the stock is up around 100%. But investors are looking at this thinking, man, it really has been, painful the last few years. But could this be, let's say, the beginning of a new bull market that could set it on that trajectory for new highs, where you're potentially looking and owning it for many, many years, delivering attractive returns from here? That's the key question a lot of investors are wondering. So we'll talk about the prospect, the time frame to getting to new highs, as well as my current thoughts on Palantir, their latest results. If you enjoy educational investment videos, you're watching Unrivaled Investing. My name is Daniel. Let's dive in to understand what's going on with Palantir. So I ask AI Ticker Chat, which leverages artificial intelligence, leverages ChatGPT's GPT-4. I say, look, let's look at their earnings call. Let's ask, why might Palantir go up on these results? First month is free with AI Ticker Chat. It nails it here. It says, look, the reason why it might go up is because revenue growth is reaccelerating. Margins are accelerating. It's their GAAP profitability, their fourth consecutive quarter. They talk about how their U.S. commercial business accelerated, growing 33%, how their new go-to-market approach around their AI platform bootcamp has been successful. We'll talk a lot more about that in just a second. They also talk about how they think their U.S. government business is going to reaccelerate. So reacceleration across the board, a lot of good stuff here. And management is leaning heavily into artificial intelligence, saying, and you can see these marketing materials on their website talking about how Palantir is named the leader in AI or machine learning platforms, how they're ranked #1 worldwide in AI software, or how they're a visionary in the Magic Quadrant for Gartner for data integration tools. So let's talk about that in just a second, but it's translating into strong underlying business growth with their U.S. commercial business revenue up 33% year over year. This is strong inflection in this business. You see their customer count up nearly 40% year over year. Their U.S. commercial customer count is up 10x over the last 3 years. So this investment in terms of leveraging AI with a U.S. commercial business, customer base, clearly that investment, clearly that focus is starting to pay off with this acceleration in growth, with that 10x increase in terms of their customer base. So this is very favorable. Now, I do have to, tick them against, what they're doing here, where they talk about, hey, look at our 29% profit margins. The problem is that 29% profit margin is largely stock-based compensation. And so when you back out that stock-based compensation, it's not 29%, it's really 7%. And I'm of the mind that if management were just to say, you know what, we had to have this mentality while we're a startup. We're no longer a startup. We're now a big boy. So what we're going to do is we're no longer going to give you these phony baloney adjusted figures. We're actually just going to give you the real profitability figures, not adjusted for stock-based compensation. I bet if they were to do that, the stock would rip a few percent, overnight, just because it's a recognition that, oh, this is a real expense, which it is, because you're diluting shareholders, and saying, hey, we want to be treated seriously. So I think that once management makes that step, I think, the stock reprices slightly higher, because right now it reflects that they're still sort of in the kiddie club in terms of how you treat stock-based compensation. Thinking about their profitability, but yeah, look, 7% is still better than negative, and they are showing real profitability. Looking at GAAP operating income now around $40 million, plus favorable operating income, or plus favorable interest income. So from the cash balance. And they also, look, they're generating near record free cash flow, around $500 million. This is really important, because even if a lot of it does come from stock-based compensation, it really does mean that they can own their own destiny. When you have your own free cash flow coming in, you don't have to require tapping into the capital markets to raise money. You could say, hey, we are going to self-finance our growth going forward, and we're going to, we are going to take our cash flow and invest it in the projects and the ventures that we think make sense. And we don't have to require, maybe if Wall Street isn't happy today, it doesn't matter, because we have the free cash flow. If there's a world war going on, if there's problems going on, we are fine because we have free cash flow and we can figure out how we want to invest it. And it also gives them the opportunity to buy back stock someday if they think it's a prudent decision. At current levels, I don't think it is. They also raised their guidance for the year, and this is also part of the reason why the stock went higher, talking about continued expected profitability and targeting roughly a mid to high teens revenue growth this year. So the question is around the new highs. Is this a new bull market for Palantir? Where does it go? First of all, in full disclosure, this is not financial advice. Also, quick plug, take charge of your investment journey with unrivaledinvesting.com, a low-cost weekly letter that helps you find potential multi-baggers, the types of stocks that can go up hundreds or even thousands of percent over time. So once again, that's at unrivaledinvesting.com. There's also some educational materials as well. So thinking about Palantir, where does it go ahead? It's important to understand right now, government is still the majority of the revenue. You can see in the most recent quarter is $308 million government revenue versus $250 million commercial. That said, commercial is growing faster. So at some point, maybe this next year, that does flip where now Palantir becomes mostly a commercial business. That means it'll become more sensitive to, let's say, the economic cycle versus government budgets. That said, it's very clear Palantir makes a very strong, voice in terms of what their values are, and very clearly that their government business isn't going anywhere and they expect it to increase over time. Now, thinking about their commercial endeavors in terms of how they're investing, what they're investing in, how they're expected to grow. One of the key growth areas that they talked about many different times on the call is around AIP, artificial intelligence platform. The way to think about this is a little tricky. And it's worth having a discussion here because I want you to think about it as well. So you have the creators of these large language models, the creators of these artificial intelligence models, like Facebook, like OpenAI, like Google. You're going to see a lot of different models that are going to get circulated. Right now, OpenAI has the most cutting edge. They most recently released Turbo ChatGPT 4. And we use ChatGPT 4 with AI ticker chat to help you, research stocks. The question is, where does the value go? How do you split up this economic pie? When you're looking at it, how much goes, let's say, to the creator of this artificial intelligence, and how much should go to the one that says, oh yeah, we can help you integrate this. We can help sell this to all these clients. And it's particularly tricky because you see AI, you see OpenAI saying, look, we're going to make it easier and easier for you to build your own GPT, leveraging your own data. And that's been one of the key value propositions that Palantir's talking about, saying, look, don't worry about the data going to Microsoft or going to someone else. We're going to help you sort of keep this secret so that no one's training off of your proprietary data, and you can create these special models. So I just wonder, how likely is it that you're going to be able to keep that special sauce of being an integrator, of which I imagine you're going to also face more competition over time? Because really, you're going to see a lot of different models. You're also going to see a lot of different folks offering integration tools. And so I do think Palantir continues to have growth. I just wonder how easy it is. And is it that continued reacceleration in this business when you face such a, changing dynamic of a landscape? For example, with OpenAI's GPT, the custom GPT that they're talking about, I was playing around with it yesterday, and it's amazing because you don't have to code it. It's all natural language on, hey, take this data and this is what I want you to do with it, and you're describing it versus having to code. So I think it's enabling, just a whole new world. That said, look, clearly Palantir has a relationship with lots of customers, and they're making intelligent investments in terms of establishing those relationships to say, hey, we'll help you navigate the landscape of all these LLMs, all these models, and help you integrate it with your data. So clearly that's a huge, huge opportunity. The question is, will the value go to the people that own the models or the people that, so help you integrate it? And I'm of the mind that it's really whoever helps you get these to these niche cases, or it's, maybe it's helping you value a stock. And let me go through an example right now where, once again, this is AI ticker chat. This is leveraging ChatGPT 4, and it's saying, hey, based on Palantir's results, It provides a framework for what its revenue growth could be over the next, 4 or 5 years, what its profit margins could be, saying 15 to 25% profit margins, and saying an end multiple 4 or 5 years from now of 25 to 35 times. And based on this framework, based on this growth, this profit margin, and this end multiple, it really is quite an ugly return for Palantir. Now, I personally would assume it could be higher margins than, let's say, 15% and higher growth than 11%. So I'd probably rule out this bear case over the next few years. But I do think, you are starting to hit a situation of, okay, what's baked into the price? Because this is a $44 billion company. So I wanted to do this slightly different analysis. Normally, I'm doing an analysis that's like what I just showed with AI Ticker Chat, showing this framework of where the stock goes. And AI Ticker Chat covers nearly all U.S. companies now above a $300 million market cap, and will include OpenAI's new Turbo ChatGPT 4 model that's going to be coming out for production shortly. But I wanted to show what would it take for Palantir to get to a new high. Let's say it gets back to $45 a share. What would it take? Because it currently has around 2.3 billion shares outstanding. So in order to get to really a compelling return, okay, so $45 a share means that the market cap at that point, getting back to a new high, would be around $105 billion. So $105 billion versus where they are today. Let's assume that in that future period, I don't know how many years out, and we're going to walk to that framework of how many years it would take to get to a new high. Let's say the end that multiple in that period is 30 times earnings. So $104 billion, a 30 times multiple means $3.5 billion in earnings that Palantir needs to earn. Based on, keep in mind, their margins are only around 7% now. Let's assume they get to somewhere between 20 and 25% in the future. Well, that implies at some point in the future, they need to have roughly $14 to $17 billion in sales. Now, they're guiding to $2 billion in sales this year. So assuming a growth rate of between 15% and 25%, how do you get to this, 14 to 17 billion? Well, it would take between 8 years and 15 years in order to get to a scenario where, assuming a 30 times multiple, assuming a 20% profit margin or a 25% profit margin, Palantir ultimately gets back to $45 a share. Now, that is a situation that is wholly unappetizing for me, saying, hey, it's going to take 8 to 15 years for this stock to maybe double, a little bit more than double from here. I think it does reflect that it's very fairly, very richly priced for Palantir. And I personally think that there are probably better bargains, out there. And I call out what I'm personally buying to my subscribers at Unrivaled Investing. We're like, if I'm going to be penciling something out for the next 10 years, it needs to have, 300, 500% upside at least. If I'm thinking of, that type of framework of like, where is it over 10 years, 10 to 15 years? So that's just me personally. I encourage you to look at this, think about, hey, do you disagree with this math or you disagree with this framework? I don't even include taxes here. So it is a bit, it is a bit aggressive in terms of, applying, that their operating margin of 20%, that's effectively their net after tax profit margin, which, keep in mind, they're nowhere near right now. So I'd absolutely love to hear your feedback in the commentary below. If you think they're going to grow faster than what I'm penciling out, let's say growing faster than 20 to 25% a year, or you think their profit margins are going to be significantly higher than what I'm penciling out. So feel free to leave a comment below. I definitely will read and respond to those. Thanks so much for tuning into Unrivaled Investing.